Hello, hello. This is the long-awaited update on Bitcoin Cash. After we had a pretty good rally set up across the markets, not just in cryptos, we've had 2 days in the red, and especially in the stock market. Cryptos looked pretty good yesterday, so we got ourselves in some pretty clear parameters on what we need to see. But this is, again, Bitcoin Cash, which I've been using as a proxy for my altcoins in general. They've all been following very similar patterns, whereas Bitcoin and Ethereum have been doing their own separate thing, which we may touch on momentarily. The charts for these patterns are linked to in the description below, so feel free to check those out. But we still have our setup that we had before, where we had potentially a 5-wave rally right here. That would be a larger first wave, and we have what could be a larger second wave, which I don't have labeled here. I'm going to add those labels on probably by the time I update this, and possibly a nested 1-2 setup. When I did my Dash update yesterday, I mentioned the same thing, in which we had a 1-2 setup. Many of the altcoins have had a higher high since the pullback, the swoon we saw end of May, but Bitcoin Cash hasn't looked as bullish. So we're going to maintain the bullish stance until we break any major supports. And I had this box drawn out, which still stands here. And it's actually not quite in the right place anymore. I actually have to go a little bit lower to actually break support. But breaking our basically the 61.8% retrace, or I'm sorry, extension of this larger pullback and retrace up would at least make it much more likely we have a lower low coming. So once again, our red alternate pattern is that this is an ABC rally up. We have a first wave down already and a second wave bounce. And if we build a Fibonacci sequence off of that, the extensions, that is what it's basically giving us right now. 170.94 would be about where our support is. I'm actually going to move the red line up just a smidge just to get that adjusted. If we break that, it makes it much more likely that we're going to have that lower low after all. And it would also invalidate this possible 1-2 setup here. This does look like an impulse to me here with maybe a fourth wave and a fifth wave, or a fourth and a fifth, something like that. A, B, C down. So we should be very close to done, if not done already, with our wave 2 pullback. So if that holds, expect a very strong rally to take us well over $290, possibly as high as $310. That is those are the standard Fibonacci targets for, well, based on this larger 1-2 setup. Now, if we don't hold support, if we break this, that immediately invalidates the immediate upside setup. And it means that we're very likely headed down to this box below. On the linear chart, it is projecting between $97 and about $82. And when and if it does happen, it would be a very quick, sharp spike down. Very likely it wouldn't last that long. This wouldn't be like a multi-month affair. And well, it'll be another dip buying opportunity. On our big picture chart, we're seeing similar. Well, we haven't really changed anything on this. This chart has remained pretty robust. We haven't broken any supports. We did get back out of our pink pullback box, and our MACD, our MACD down here remains, the divergence remains as it did before, in which we've had continued lower prices up until May 12th and less stretched MACD to the downside. So we have our two patterns reflected here, orange and red. Red is primary. That is assuming we are done with the pullback. Orange is the basically the contingency. If we go back down lower and call for a lower low, it would very likely mean that our upside structure would still be about the same. Some of the projections may be different, but there's really not too much practical difference between either pattern. So expect a slightly lower low if we get that. Our targets do project a little bit differently, whereas on the linear chart, we had them targeting somewhere between $82 and $98. Here, we have projections that could, well, it's more likely we're going to stay in the upper half of this box. So maybe 105 would be a strong low target if we do have a lower low. 74 is, of course, the lower support of the box. We really shouldn't break that, and going any lower than that would jeopardize the entire rest of the rally. So it might put us in the same boat with Bitcoin Cash as we are in with EOS, although arguably it could be even worse, because here our low, that is the base support, was actually back in December 2018. So it may mean that this is an A, B, and a C wave if we do break that lower low, which would reset our rally structure to the upside. So right now, that is not something that I'm too concerned about. We're sticking with the existing pattern. So until we break more support, we're going to have more of a bullish stance. If we are going to rally, expect a 3-wave rally up to our final target. Our first wave, in this case, an A wave, because it's a three-wave zigzag rally, which I'll explain in a second, will more likely than not mirror what we've seen on the downside. So expect something to get us between the 600 to 938 range, maybe even in that blue-green box. We don't have a perfect standard target for the upside, and basically recreating what we had back here from the March 2020 bottom. We had a clear A wave, B wave down, and a C wave. So that was about a 61.8% retrace. So I'm kind of recreating it here because Elliott waves are fractal in nature, and that would project up to our support, our resistance zone up ahead. There's a lot of confluence at $4,000. That was the high that we hit way back in 2017. So bigger picture, the reason why we expect a three-wave rally is that we can easily count this as a diagonal pattern. So this is a ABC first wave, ABC second wave, ABC third wave. The third wave is longer and more powerful than the first wave. And we hit not quite the 1.3282 extension, which is the standard target for an impulsive third wave, but rather we just broke the 1.236. So those are all signs that we're in a diagonal. Then we've had a clear three-wave pullback for the fourth wave, which has been very deep, which is what you expect for a diagonal. The bottom right now is significantly lower than the first wave top. So again, these are all classic signs that we have a diagonal. And as a matter of fact, I need to redraw this channel trend line because, well, it looks more like this now. You could even argue we could start over here. And if we bring that over, translate that up, put it through our first wave top, that does project a little bit differently. So, well, it could change the timing. So we don't know for sure exactly what's going to happen. Sometimes you have a very powerful bounce back if we're stretched too far to the downside. But that is why we expect a three-wave rally, because in a diagonal, the internal wave structures are not clearly impulsive. You'll have A waves, B waves, and impulsive looking C waves. In this case, could see a blow off kind of situation, maybe an ending diagonal for that C wave. So once we have our bigger AB up, that'll be a great opportunity to buy if you're looking to put in more cash to buy some more positions. It'll also help us confirm that the bottom is behind us, and we can make a much more clear projection of where the top is. Again, I'm still projecting about exactly where we've been projecting. There's no reason to think anything else at the moment. So we're going to see if we get that or not. A lot of reasons why we would expect that, and that top eventually would coincide with what we're seeing in other crypto coins as well as the stock market. I have a chart on Marathon Digital Holdings, which I covered yesterday, the day before, the crypto blockchain miners. And we have a top target of around October of 2023. Now, that may align more with the stock market. Cryptos seem to hit their major inflection points a little bit early, so in advance of the stock market tops. So it could mean we see a top maybe in the middle of 2023. Again, very early right now to make any kind of projection like that. We have a bit more clarity on Bitcoin, Ethereum charts. So as the pattern develops, we'll have obviously an upside target, better estimate of what the structure will look like, and possibly better timing. So subscribe, that way you don't miss those ongoing updates. And if you enjoyed my video, don't forget to give me a like. Till next time, thank you for watching and happy trading.